Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Carsgen Therapeutics Holdings Limited annual report. Carsgen Therapeutics Holdings Limited is a biotechnology company that specializes in developing chimeric antigen receptor T, CAR-T, cell therapies for various diseases. The company's products include CT53, which treats relapsed/refractory multiple myeloma, and several autologous CAR-T product candidates. One of the notable product candidates is CT41, which targets Claudin 18.2 and is in phase II/III clinical trial for gastric/gastroesophageal junction cancer and pancreatic cancer. Another candidate, CT71, is in phase I clinical trial for relapsed/refractory multiple myeloma, primary plasma cell leukemia, and newly diagnosed multiple myeloma. The company is also developing several other CAR-T product candidates, including CT590 and CT059X, which target B-cell maturation antigen and are in phase I clinical trial for the treatment of relapsed/refractory multiple myeloma and primary plasma cell leukemia. Additionally, KJC2219 is in phase I clinical trial for the treatment of B-cell malignancies, systemic lupus erythematosus, and systemic sclerosis. Furthermore, Carsgen Therapeutics Holdings Limited has several product candidates in preclinical stage, including KJC2114 for solid tumors and KJC2526 for acute myeloid leukemia, other malignancies, and senescence. The company's focus on developing innovative CAR-T cell therapies has the potential to revolutionize the treatment of various diseases. Carsgen Therapeutics Holdings Limited market capitalization of $10 billion is materially smaller than most of its industry peers of roughly $23 billion. Carsgen Therapeutics Holdings Limited trades at a higher price-to-book ratio of 11.23 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline for the company can be identified from various factors extracted from the summaries. Revenue growth is primarily driven by significant sales growth of zevorcaptagene autoleucel, increased orders from Huadong Medicine, and approval and commercialization preparations for satracaptagene autoleucel. The commercialization of Zevercel in the Chinese mainland and continuous marketing activities have also contributed to revenue growth. Additionally, a decrease in research and development expenses and administrative expenses has positively impacted revenue. On the other hand, there are no explicit drivers mentioned for revenue decline. However, discrepancies between orders obtained and ex-works deliveries due to manufacturing time cycles may be contributing factors. The net income of the company underwent a significant change between 2024 and 2025. In 2024, the net income increased due to the approval of new products, which generated additional revenue for the company. However, this trend was reversed in 2025 when the net income decreased. The main reason for this decline was the imposition of potential additional taxes by the PRC tax authorities. The profit margins also experienced a change between the 2 years. Although not explicitly stated in 2024, it is expected that the profit margins would improve with the launch and commercialization of new products. However, in 2025, the profit margins were reduced due to the relinquishment of interests in consolidated affiliated entities and the loss of permits and licenses. These factors contributed to a decrease in profitability for the company in 2025 compared to the previous year. The company's financial performance indicates a concerning trend regarding its operating cash flow. According to the provided information, the company has been generating negative operating cash flow, which is a red flag for any business. The net cash used in operating activities for 2025 was a significant 236,900 RMB, further confirming this trend. This negative operating cash flow suggests that the company's expenses are exceeding its revenues, resulting in a net outflow of cash from operations. This can be a sign of underlying issues such as inefficient management, high operational costs, or poor revenue growth. The fact that this trend persisted in both years, as confirmed on pages 183 and 184, raises concerns about the company's ability to sustain its current financial trajectory. In conclusion, based on the provided data, it is clear that the company is not generating positive operating cash flow, which poses a significant risk to its long-term viability. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, total borrowings decreased by RMB 89 million on page 29, indicating a reduction in debt. However, on page 30, it is stated that there was no significant change in debt level, which seems to contradict the previous statement. Further analysis reveals that interest-bearing bank borrowings decreased from RMB 20,287 to RMB 0 on page 180, and then to RMB 25 on page 181, indicating a substantial reduction in debt. The most notable decrease is seen on page 233, where it is stated that the debt level has decreased significantly from RMB 89,137 in 2024 to RMB 0 in 2025. Regarding interest expenses, there was a decrease of $308 in interest paid for lease liabilities on page 184. On page 215, it is reported that interest expense on financial liabilities changed from RMB 0 in 2024 to RMB 37.4 in 2025, indicating a significant reduction. Additionally, the interest expenses decreased from RMB 0.3124 in 2024 to RMB 0.2816 in 2025, as stated on page 228. Overall, the company's debt level and interest expenses have shown a substantial decrease over the past year, indicating a positive trend in managing its financial obligations. Management is optimistic about the company's future prospects. On page 5, they highlight significant progress in pipeline development and commercialization, setting a strong foundation for long-term value creation. The company expects to have sufficient cash reserves through 2030 due to operational factors. Page 7. Management is particularly enthusiastic about the potential of Zevercell in China, citing a strong partnership with Huadong Medicine. Page 12. The company is addressing challenges in the CAR-T industry by developing innovative technology platforms, including allogeneic CAR-T technology, to reduce costs and increase accessibility. Page 18. This is part of a broader strategy to expand its research into more promising oncology targets for cell therapies. Page 20. Enhancing its product pipeline with proprietary antibody platforms and CAR T-cell technology. Management believes the company's pipeline products have significant global market potential in the future, justifying continued investment in research and development efforts. Page 27. The company plans to expand its markets in China and globally through various means, including self-development, mergers and acquisitions, and a combination of financing channels. Page 31. In addition to its business strategy, the company is committed to achieving carbon neutrality by establishing an ESG governance system to address climate-related risks. Page 144. It will also continue to comply with environmental laws and regulations, prioritize pollution prevention measures, and transition to accounting for Scope 3 greenhouse gas emissions. Page 152. Overall, management's outlook is positive, driven by progress in pipeline development, commercial success of key products, and a commitment to sustainability. The company's financial history reveals a consistent practice of distributing profits to its shareholders through dividend payments. This is evident from the explicit statement on page 90, which clearly indicates that the company has indeed paid dividends. As a result, investors can expect a regular return on their investment in the form of dividend payouts. Concerns about inventory buildup and supply chain disruption are evident in various sections of the report. On page 146, transportation disruptions, sourcing difficulties, and potential raw material shortages are highlighted as major concerns. This is further exacerbated by rising raw material costs on page 147, which could lead to reduced supply and increased prices. The concentration of trade receivables with a single company on page 230 also raises inventory concerns, although supply chain disruption is not explicitly mentioned in this section. However, proactive measures such as stockpiling key raw materials during the typhoon season, page 148, suggest that companies are aware of potential disruptions and are taking steps to mitigate them. Overall, these points indicate a need for vigilance regarding inventory buildup and supply chain resilience. That concludes the financial summary for Carsgen Therapeutics Holdings Limited. Feel free to comment below, and I will be happy to answer them when possible.